Hello, you're watching the Crypto Roundup on Proactive. Billy Farrington standing by with all the latest from the crypto markets. Billy, good to speak with you again. How did Bitcoin fare this week?
Yes, hi, Stephen. Always a pleasure. How did Bitcoin perform this week? Well, not particularly well, to be completely honest with you. As I'm looking at the charts right now, we're looking at around 4% lower week on week. And the current spot prices on the Bitcoin dollar pair is around $56,700. So definitely be up below that key $60,000 resistance line that I've sort of put up on my whiteboard as the kind of line where the bulls are probably wanting to get past in the near term. So we're quite substantially below that at the moment, and it has been a week in the red. But that hasn't necessarily been specifically to Bitcoin. Markets are down more or less across the board in the equity space. We're contending with those persistent fears of a cooling US economy, and the latest labor data today has not really dispelled those fears. With the US economy adding fewer jobs than expected. So, more or less a negative week for Bitcoin, but nothing specific to the cryptocurrency markets because that has basically been the running theme across all risk assets.
Billy, should we take the prospect of the September effect seriously?
Yes, well, for the listeners who are uninitiated, September or September, as the clunky saying goes, or Red Timber, I think is another term. It's more or less, historically speaking, one of the worst, if not the worst, months on record. Sorry for Bitcoin. And if you go back and look at the data, which I did, then there are. I mean, it is accurate to say that September is the worst month on record. The last 7 months, the last 7 Septembers, for instance, Bitcoin is closed in the red. Something like 10 of the last 13 Septembers have been bearish for Bitcoin. So I don't know. Should you be worried about it? Well, perhaps we'll see some selling pressure this month, but that more or less, I mean, if you look at the data, then October is typically a month of recovery. So, I mean, if you're like a super short-term investor, maybe you should be worried. But for people with a bit more resilience and who are more likely to sort of hold on to their investments for longer than a couple of weeks, which you probably should, then I don't think it'd be too big of a problem. And also, the kind of the September effect is not also not specific to Bitcoin. For instance, the it's been the worst month on record for the S&P 500 as well over the last 100 years. So definitely September is not a great month for markets in general. It's quite interesting kind of researching why, and there are a lot of theories, whether those are psychological theories of kind of the early stages of the holiday season approaching, and obviously it's the end of a quarter. And it could be self-fulfilling as well. If everybody keeps saying September is the worst month on record, then people are going to be like, well, I better exit then. And it kind of just sort of propagates itself as well. So there are quite interesting sort of psychological reasons why September is a bad month. But in terms of being worried about it, well, I don't know. I mean, it's not it's a different September than usual. Obviously, we have the Federal Reserve interest rate decision coming up on the 17th, right? And that's a very high stakes interest rate call. Because as you probably know, interest rates have been super high over the last couple of years, and it's looking quite likely that the Fed will finally uh, put a cut in. Whether that's a 25-point cut or a 50-point cut, that remains to be seen. But Fed Chair Powell has more or less telegraphed in the fact that there will be an interest rate cut this month, and so that's just going to throw in a bit of a bit of a spanner in the works in terms of how to expect the markets going forward. Typically, you would expect an interest rate cut be good for risk assets, but I guess we're going to have to see in that regard.
I mean, what's the forecast for the Fed meeting, Billy?
Yeah, the latest forecast, from what I can see, is a 50-point cut. So that would be bringing down the interest rate to a flat 5%. That is not a foregone conclusion, though. But I'd put my money on there's going to be a cut. Stephen.
Well, then I'll say roll on the fake meeting and roll on October. Billy, thank you very much as always for your insights.
All right, thanks a lot.
That's Proactive's Billy Farrington.